Welcome to Money is Freedom, a podcast exploring how finance and freedom connect in our lives. Created from thoughtful research and narrated by Notebook LM AI, this series brings you clear, meaningful insights into finance and beyond.
In the State of AI 2025, Bessemer Venture Partners highlights 2025 as first light. Following the 2023 AI Big Bang, mass release of ChatGPT, revealing emerging AI galaxies of foundational companies and best practices. This episode explores new benchmarks for AI startups, categorizing them into two archetypes: Supernovas, which are explosively scaling with unprecedented growth, often trading distribution for profit, with approximately 25% gross margins, and shooting stars, which are fast-growing, capital-efficient companies achieving strong product-market fit and approximately 60% gross margins.
Welcome back to The Deep Dive, your shortcut to being well-informed. Today, we're navigating the rapidly expanding universe of artificial intelligence.
That's right.
Specifically, we're looking through the lens of Bessemer Venture Partners, the State of AI 2025 report.
Really important one.
You know, if 2023 was the AI Big Bang, as they put it, then 2025 feels more like first light.
First light. I like that.
Yeah, the initial chaos seems to be subsiding a bit, and we're starting to glimpse, foundational companies, emerging best practices, clearer paths forward.
Yeah, things solidifying.
And the report's message is, pretty unequivocal. AI is driving the biggest wave of technology change we have ever witnessed.
And that's precisely why this deep dive into Bessemer's report is so crucial. For any founder, investor, or really anyone just trying to separate the genuine innovation from, let's face it, the sheer volume of hype.
There is a lot of hype.
Oh, yeah. There's still plenty of wild unpredictability and dark matter out there, as they call it. But Bessemer, having deployed over $1 billion into AI-native startups since 2023, they're kind of uniquely positioned to map this out.
$1 billion definitely gives them perspective.
Exactly. So their mission with this report: share concrete benchmarks, tour roadmaps across 5 key AI areas, surface those unanswered questions that dark matter, and importantly, offer 5 bold predictions.
It's like they're handing us a constellation chart for the future then.
That's a great way to put it. A constellation chart.
Okay, let's unpack this. The report kicks off with a really fascinating look at what great actually means for AI startups now. In 2025, it's moving beyond just traditional SaaS metrics.
Right.
They highlight this tale of 2 AI startups, introducing what they call supernovas and shooting stars.
It's a brilliant distinction, really captures the 2 main types of explosive growth we're seeing. First up, the AI supernovas. These are companies showing truly unprecedented velocity, sprinting to around $40 million ARR in their first year of commercialization.
$40 million?
Year 1, and then hitting a staggering $125 million ARR by year 2.
Wow.
Now, what's crucial to understand is that these supernovas often operate with low gross margins, sometimes even negative.
Really? Negative?
Yeah, they're actively trading profit for that rapid distribution for market share. But get this, their revenue per full-time employee is incredible. About $1.13 million ARR per FTE.
Whoa.
Which is like 4 to 5 times higher than a typical SaaS company.
Super efficient in that sense.
Extremely. But the report does caution, this hypergrowth can sometimes signal vulnerability, maybe low switching costs or what they call thin wrapper concerns.
Dazzling, but potentially fragile. That's a sharp warning. So are these supernovas just like a necessary early stage, or is there a real danger many won't last past that fragile phase with those low margins?
Well, it's probably a bit of both, isn't it? The supernovas definitely push the boundaries. They prove out entirely new categories. But yes, the risk is real. Many might struggle to convert that rapid adoption into sustainable profit if they don't build strong defensibility. They set the pace, but maybe the long-term winners evolve differently.
Which brings us to the second type, I guess.
Exactly. Then you have the AI shooting stars. These are more like stellar SaaS companies, just accelerated.
Okay.
They achieve strong product market fit, great retention, impressive expansion. They grow faster than traditional SaaS, but at rates that are, more capital efficient, more sustainable.
Makes sense. What do those benchmarks look like?
So approximately $3 million ARR in year 1, growing to maybe $12 million in year 2, then $40 million in year 3, and hitting around $103 million in year 4.
Still very fast growth.
Oh, absolutely. But crucially, they maintain healthy gross margins, typically around 60%. and they achieve about $164,000 ARR per FTE in their first year.
Okay, so a different profile entirely.
Right. And this growth trajectory is so significant, Bessemer actually coined a new term for it, Q2T3.
Q2T3.
Yeah, it stands for quadruple, triple growth over 5 years.
Quadruple, triple. That's serious acceleration. Does this mean the rules for scaling have fundamentally changed for all startups now, not just AI ones?
That's a great point.
Because the report really emphasizes that while supernovas grab headlines, shooting stars are the most important benchmark to aim for. Scalable, capital-efficient growth that's now uniquely achievable.
Absolutely. I think speed just matters more than ever. AI has undeniably unlocked faster product development cycles, quicker go-to-market, more rapid distribution. That Q2T3 isn't just some pie-in-the-sky dream anymore. It's becoming an achievable benchmark for many.
So the bar's been raised for everyone.
Pretty much. But the tools to reach it are also more powerful now.
Okay, so with those benchmarks set, the report then shifts gears. It takes us on this tour through what they call the roadmaps of the AI cosmos.
Yeah, I like that framing.
It's where we see these early galaxies of AI forming, but also bump into that dark matter, those big, unresolved questions still shaping everything.
Precisely, and they start with the foundation.
Yeah.
AI infrastructure.
Right. And here you can clearly see galaxies forming in the model layer. You've got the big players, OpenAI, Anthropic, Gemini, Llama, xAI dominating headlines.
Usual suspects.
But it's not just them, right? The open source models like Kimi, DeepSeek, Quinn, Mixtral are also showing real strength, sometimes in specialized areas. What does that dual track mean for the ecosystem?
Well, it creates this really vibrant competitive landscape, which is generally good. The report calls this phase AI infrastructure's second act.
Okay, second act.
Yeah, the first act was, algorithmic breakthroughs, proving AI could solve problems. Now, the shift is from just solving problems to building systems that can define, measure, and solve problems with experience, clarity, and purpose.
More operational, more integrated.
Exactly. So we're seeing new infrastructure tools emerge. Not just for scale, but for grounding AI in real-world context, for continuous learning. Think reinforcement learning environments like Fleet and Matrices, or new evaluation frameworks from companies like BigSpin.ai and Kiln AI, and also the rise of compound AI systems integrating knowledge retrieval, memory, planning.
That brings up the dark matter they mentioned here, the bitter lesson of AI, which is this idea. Well, you explain it.
Right. The bitter lesson essentially poses the question, will simple, scalable architectures fed with vast amounts of data always win out in the long run? Or will more complex technique-specific approaches for embedding context and domain expertise ultimately prove superior? It's still an open debate.
So for a founder building here, the challenge is how to best embed that domain knowledge. Is it about the data or the techniques?
It's really both. The how of getting specific intelligence into your model effectively is still a massive area of innovation. You probably can't just throw more generic data at every single problem and expect the best outcome. Technique matters.
Okay. From infrastructure, it's a natural jump to the builders, the developers, and the report sees a huge shift in how they'll even interact with these systems, doesn't it?
Oh, absolutely. In developer platforms and tooling, the big shift they highlight is natural language becoming the new programming interface.
Prompts as programs.
Exactly. Prompts are programs, and LLMs are acting like a new kind of computer. It's a paradigm shift. AI isn't just an incremental change for developer tools. It's a completely new way to think about software development.
And within that, they talk about galaxies forming around something called the Model Context Protocol, MCP, described as the USB-C of AI. What's that about?
The USB-C of AI. It's becoming a universal way for AI agents to access external APIs, tools, real-time data. Think of it as a standard plug.
Okay.
It allows for persistent memory across sessions, complex multi-tool workflows, fine-grained permissions. This means agents can actually chain tasks together, reason over live systems, and truly act for users, not just assist passively.
So they can actually do things?
Right. And key enablers here are things like Prefix Fast MCP and tools like Arcade and Keycard. It's all about empowering agents to handle complex tasks securely and effectively, letting them plug and play with different tools.
This seems to connect to the next bit of dark matter, memory, context, and beyond. You mentioned memory earlier. Can you break down the difference between context and memory as the report sees it?
Yeah, it's a critical distinction. Context is the data the model sees during inference, basically. It's immediate working memory for that specific interaction.
Okay, like what's in the prompt window?
Sort of, yeah. Memory, though, is the information retained across interactions. This is what allows for multi-step reasoning, personalization, continuity over time for an agent.
Ah, okay, so memory builds up.
Exactly. And the leading stacks are combining short-term memory via large context windows, long-term memory using vector databases, maybe memory OVs, and semantic memory through techniques like hybrid REs.
And the report says this context and memory might be the new moats for AI application founders.
That's the key insight. When your product accumulates intelligence about a user or their specific world, it creates what they call emotional switching costs.
Emotional switching costs.
Yeah, those accumulated insights become incredibly sticky assets. It's not just what the AI knows generally, but what it remembers and understands about you specifically. That's hard to replicate.
That makes a lot of sense. Okay, moving on to horizontal and enterprise AI. This is where it gets really interesting, I think. The report suggests AI is starting to disrupt massive horizontal systems of record. SOARs like Salesforce, SAP, stuff that seemed untouchable.
It's a potential seismic shift, for sure. We're seeing Galaxies forming as these traditional systems of record might get replaced by what the report calls systems of action.
Systems of action. How does AI enable that?
Well, AI's ability to structure unstructured data like emails or call transcripts, and its ability to generate code on demand that dramatically speeds up migration away from legacy systems. Those painful multi-year implementations, maybe they become obsolete.
Replaced by
agentic workflows doing the rote data entry. Think CRM tools like Day.ai or Adio, automatically logging customer interactions from everywhere. Or AI-native ERPs like Everest, DOS, Roulette automating finance tasks.
So what are the key unlocks for founders trying to build these?
The report highlights a few. Using AI as a Trojan horse feature to get access to data flows, achieving like 90% faster implementation thanks to code generation, doing data migrations in maybe a day using AI, and delivering a clear 10x ROI compared to the old systems. It's a completely different value proposition.
A total reinvention. We're seeing similar wedges in HR, recruiting, enterprise search, FP&A too, right?
Yeah, similar patterns are emerging across those horizontal categories.
But okay, the dark matter here is enterprise ERP and the long tail of SOAR. So, while disrupting Salesforce might be happening, replacing a giant complex manufacturing ERP system that's further off.
Much further off, according to the report. While there's exciting stuff in AI native accounting and ERP for SMBs and maybe mid-market, large-scale enterprise ERP replacement, especially for complex industries with intricate supply chains, that's still years away.
Why is that so much harder?
Just the sheer inertia, the existing deep integrations, regulatory hurdles, the complexity, it's immense. And then there's the long tail of other source identity platforms, computer-aided dispatch systems, content management systems. Disrupting those is likely a decade-long journey.
Patience and capital needed there.
A lot of both.
Got it. Now let's shift to vertical AI. The report seems really bullish here, noting how AI is tackling those technophobic verticals that traditional SaaS kind of struggled with. What's AI's edge in these specific industries?
AI's edge is its ability to handle high-value tasks that are often multimodal, dealing with images, voice, sensor data, or heavily language-based. These were often manual, service-intensive processes that old-school SaaS couldn't automate effectively.
Okay, so it cracks problems SaaS couldn't.
Exactly. And we're seeing Galaxies forming with really concrete examples of vertical-specific workflow automation.
Like what?
Okay, in healthcare. A Bridge automates clinical notes. SmartDix helps hospitals find missed revenue. Legal. EvenUp generates demand packages for personal injury cases. Ivo reviews contracts. Education. Brisk Teaching and Magic School are building AI tools for teachers. Real estate. Elise AI automates property management, communications, home services. Hatch uses AI for customer service teams. Rilla analyzes sales calls.
Lots of specific examples. Are there patterns to these successful vertical AI companies?
Yeah, the report identifies three key patterns. One, they start with a compelling wedge, often a language-heavier multimodal task, maybe involving voice or audio, deeply embedded in a workflow. Two, context is key. They need deep domain expertise and build data modes specific to that vertical. Three, they're built for value, delivering clear, often 10x productivity gains or massive ROI right away.
Makes sense. But then there's the dark matter. Integrating with or competing against legacy systems in these verticals, dealing with incumbents waking up, and whether data moats are truly defensible and fragmented, often privacy-sensitive industries like healthcare. How do founders navigate that?
It's definitely tricky. That's the challenge. Deeply embedding into workflows helps create switching costs. Building truly proprietary data insights, especially from unique data types like voice in that vertical, builds defensibility. But yeah, it's a constant battle against the inertia of the old systems and incumbents who are starting to react. You have to deliver undeniable value.
Undeniable value. Okay. We've covered enterprise, verticals, infrastructure. What about us, the everyday users? The report also looks at consumer AI, noting a shift beyond just basic productivity.
Absolutely. The consumer space is evolving. We're seeing usage move into deeper areas like therapy, companionship, self-growth. But the core Galaxies forming are still around AI assistance for everyday tasks and, interestingly, creation.
Assistance and creation.
Yeah. General-purpose LLMs like ChatGPT and Gemini are becoming daily habits for literally hundreds of millions. Voice interaction is also getting much bigger. And then you have Perplexity emerging as a breakout darling for AI-native search.
I've heard a lot about Perplexity.
Right. And their agentic browser concept, Comet, could potentially redefine how we think about ambient agents, AI just working for you in the background. Plus, AI is dramatically lowering the barrier to creation. Think Create.xyz for building apps, Suno, and Udio for music.
Moon Valley, Runway for multimedia.
Exactly, making creation accessible to way more people. And we are seeing those purpose-built AI assistants too, especially in mental health. Rosebud, Finch, although areas like email calendars seem tougher due to trust issues.
Okay, so what's the dark matter in consumer AI? Clear, unsolved consumer pain points. Like what?
Well, it seems many obvious high-value consumer use cases are still underserved because the underlying agentic infrastructure, the tech that lets AI take complex actions safely and reliably, is still maturing.
So the tech isn't quite there for some big ideas.
Not quite robust enough yet for things hiding in plain sight, like a truly personalized end-to-end travel concierge that books everything, or smart shopping agents that don't just find deals but actually browse, compare complex options, and securely check out for you across different sites.
That would be amazing.
Right. But it raises the big question, who will ultimately own these powerful agentic use cases? Will it be the browser, a general LLM assistant, or a new wave of specialized purpose-built agent apps?
A battleground for the next generation of consumer tech.
Exactly. The answer will likely determine the next big consumer platform winners.
Okay, that's a fascinating space to watch. And speaking of the future, let's pivot to Bessemer's 5 big predictions for AI in the coming years. These are based on their partners' consensus.
Yeah, these are their boldest calls. Prediction number 1. The browser will emerge as a dominant interface for agentic AI.
We touch on this with Comet. Why the browser?
They argue these new agentic browsers like Comet or Dia aren't just add-ons. They're embedding AI right at the operating layer. This allows for multi-step automation, intelligent actions across different websites and tabs seamlessly.
So it's deeply integrated.
Exactly. Its ubiquity and that deep integration make it, in their view, the most capable and inevitable interface layer for agents. They even say the new browser wars have begun.
The browser as the AIOS.
Interesting. Okay, prediction 2.
2026 will be the year of generative video. We had images hitting maturity in 2024, voice really taking off in 2025. Video is next.
It feels like video generation is moving incredibly fast.
It is. Models like Google's Veo 3, Kling from China, OpenAI's Sora, Moon Valley's Mirai, they're rapidly improving in quality, controllability, realism. They see it nearing a tipping point for real commercial viability at scale soon.
Beyond just cool demos. But what are the hurdles besides just making it look good? Well, there are big questions about market structure. Will the big labs dominate? Can open source compete? What about real-time video generation? And, maybe most importantly, the IP and copyright issues are getting exponentially more complex with video. That's a major hurdle for widespread commercial use.
A legal and ethical minefield.
Pretty much.
Okay, prediction 3.
Evils in data lineage will become a critical catalyst for AI product development. This one sounds a bit technical, but it's crucial.
Evaluations, okay. Why so important?
Because enterprises aren't just looking for raw performance anymore. They need confidence. They need to trust the AI. Public benchmarks aren't enough for specific, real-world business applications.
So they need custom testing.
Exactly. The prediction is a big shift in 2025-2026 towards private, grounded, and trusted internal evaluation suites, tailored to a company's own data, their specific risks, their industry regulations.
This sounds like the boring but essential plumbing that makes AI trustworthy, especially in regulated fields like finance or healthcare.
That's a perfect way to put it. For founders, the real differentiator won't just be accuracy scores. It'll be proving exactly how, when, and why your model works reliably in their specific environment. Tooling for this is emerging multi-metric evils, synthetic data environments from companies like Braintrust, LangChain, Archetypes. You need built-in evil infrastructure.
Got it. Prediction 4. This one feels a bit sci-fi.
Yeah. A new AI-native social media giant could emerge.
Whoa. Like what?
Well, they draw parallels to past tech shifts. PHP-enabled Facebook, mobile-birthed Instagram, mobile video-fueled TikTok. What fundamental AI capability enables the next social giant?
What are the possibilities?
They speculate it could take different forms.
Yeah.
Maybe a network where AI agents manage a lot of our social interactions for us. Or maybe platforms populated by emotionally intelligent AI influencers, or even clones of real people, building on things like character.ai or Replica.
AI agents managing our social lives, or platforms full of AIs. That's a wild thought. Could that make things like echo chambers worse, or maybe offer different kinds of connection?
That's the huge unanswered question, isn't it? It's a real tension. AI could personalize connections deeply, or it could create incredibly sophisticated manipulation or echo chambers.
Yeah.
Or just feel uncanny. The breakthroughs in voice, memory, generative media are the fuel, but the societal implications are massive and unknown.
Definitely one to watch. Okay, the final prediction, number 5.
The incumbents strike back as AI M&A heats up. Basically, after a couple of years of watching startups disrupt, the big enterprise giants are now aggressively buying AI capabilities.
So the big guys are waking up and opening their wallets.
Yep, especially in vertical software, healthcare, logistics, legal tech. They're acquiring AI-native companies not just to add features, but often as a way to fundamentally reinvent their value proposition.
So for founders, does this change the build versus sell calculation? Is the window closing, or are new exit doors opening?
It definitely shifts the landscape. It means founders need really strong technical moats, strong data moats. They need to be thinking about M&A strategy earlier, perhaps, and understanding where the incumbents are weak, so they can position themselves as the essential missing piece. It's both a threat and potentially a huge opportunity for strategic exits.
Wow, okay. Those are some really thought-provoking predictions.
Yeah.
So let's try to bring this all together. What does this mean for you, the listener, maybe the builder, the innovator out there? What are the absolute key takeaways from this deep dive into the state of AI 2025?
Yeah, Bessemer helpfully boils it down to 10 crucial points for founders. First, really understand those 2 AI startup archetypes. Are you aiming for supernova velocity or sustainable shooting star growth? Know your path.
Okay.
Second, remember that memory and context are the new moats. Build products that learn, adapt, personalize, that creates real stickiness.
Got it. Memory and context.
Third, systems of action are replacing systems of record. Don't just sprinkle AI on old workflows. Use it to completely reimagine them.
Reimagine, not just enhance.
Exactly. Fourth, start with an AI wedge. Solve a narrow, painful, high-friction problem with obvious 10x value, then expand from there.
Find that wedge. What's fifth?
Fifth, the browser is your canvas for agentic AI. Think about how your application can leverage the browser as this emerging AI operating layer.
Okay. Browser as the platform.
Sixth, private continuous evaluation is mission critical, especially for enterprise. Build in ways to prove your AI is trusted, explainable, and performs reliably in their world.
Build in trust. Makes sense.
Seventh, speed of implementation is a strategic advantage. Use AI to crush onboarding times and make switching to your solution painless. That undermines vendor lock-in.
Faster time to value.
Precisely. Eighth, vertical AI is the new sauce, those supposedly technophobic industries. They're adopting AI fast when you solve their core, high-value problems with clear ROI.
Go deep in verticals.
Ninth, incumbents are awake and acquisitive. Build strong moats, know your value, and be M&A ready if that's your goal.
Be prepared for M&A. And the last one.
And finally, 10th, and maybe the most important, taste and judgment are your differentiators. In a world overflowing with AI capabilities, human insight into what should be built, what users truly need, what constitutes a great product experience, that's becoming the ultimate differentiator.
Taste and judgment. I like that. It's not just about the tech itself.
Not at all. It's about applying it wisely.
This deep dive really hammers home just how dynamic this AI universe is. The rules are changing so fast, but the opportunities for real innovation, for those with the right insight, the right judgment, they seem immense. Thank you for joining us on this exploration of the state of AI 2025.
Absolutely. And maybe a final thought, building on the report's conclusion, they say, You don't just need a better model. You need a better model of the world. The companies that win next won't do more AI. They'll do the right AI at the right altitude with the right outcome. So as you navigate this AI cosmos, maybe reflect on that. What is the right AI as the right level for the specific problem you're trying to solve and the value you truly want to create?